Good morning, everybody. This is the live market open for July 13th. It's a Wednesday. I'm Yochalam Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. As always, we'll discuss recent developments in markets, which have been relatively positive, various charts and levels, and the next week or so. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. As always, your questions are highly appreciated and welcome. Okay, so what's going on in markets in recent days? Well, we have seen some kind of improvement. Markets are a bit more upbeat on the political certainty in the UK. Theresa May today will become the UK Prime Minister. She will enter 10 Downing Street, replace David Cameron, and that happened quite quickly, much quicker than expected, and that's good news for markets. Okay, well, let's look at the pound since that happened. Okay, so just on Monday, we still had a competition. These are the levels on Monday. We had a competition within the Conservative Party. We had, on one hand, Home Secretary Theresa May, quiet supporter of Remain, against Andrea Leadsom, of fierce proponent of Brexit. And on Monday at noon, while the pound was sliding and expectations for significant stimulus from the Bank of England will reach that as well, Andrea Leadsom quit and paved the way for Theresa May to become PM. Everything happened quite quickly. She became leader. David Cameron said he'll go now. Today has his last session, and the reaction in markets was quite swift. This is the initial rise right here. This bounce back from 128.50 from the abyss, close to the lows, to around 130, and since then we're going up and up and up and up. Mostly yesterday, reached a high so far of just above 133. 133.36. Reached resistance here at close to resistance at 133.50. I see support at 132.40. Cable remains quite volatile. We're actually back to the range that we've seen. It was last week before we had this trouble in the UK with the property funds, with all these funds that told investors that they cannot withdraw money. Clear sign of panic. Okay. Anyway, this is a big bounce, mostly on the certainty in the UK. Let's talk a bit about that. What does certainty mean? We know the name of the new prime minister. The contest that was supposed to end on September 9th has ended now. The new prime minister on July 13th, 2 months earlier. That's the good news. The not so good news, which isn't new, but we still have lots of uncertainty. We don't know what her policies will be. She said Brexit will be Brexit, respecting the will of the British people, and markets don't like that too much. And what does it mean? Will they trigger Article 50 immediately or not? How will the negotiations with the EU go? Merkel is pushing the new government in the UK to act, to provide more clarity. Also, the French are under pressure or trying to pressure. Anyway, there's still lots of uncertainty, and we'll also talk later about, do a special preview for the Bank of England's decision tomorrow. As the Bank of England provides lots of stimulus, that's not necessarily that good for the pound. Okay, but at least for now, we have more certainty about at least who will lead the government, and maybe today or tomorrow we'll also know who will be the Chancellor of the Exchequer, the British term for Finance Minister, and that will also provide a bit more clarity. Okay, we also need to know the policies, not only the people in charge, but so far it's positive for markets. Okay, so that's one big story we're following. Still, if we zoom out to the bigger picture, we are still at the lowest level since 1985. Okay, still at the levels lower than the post-crisis lows of 2009, but at least we're off the bottom, around close to 500 pips off the very, very lows. Okay, anyway, levels I'm watching here in the pound are 132.40 to 133.50. That's the current range. Further support at 131.20. That was the initial the second fall, and around 134.80 is the next level of of resistance if we have a move to the upside. Note that the weekend gap that we had in the weekend after the referendum has never been closed, okay? You can see this gap here. So that's quite a gap. So I'm still not sure if the falls are over, okay? But let's continue with other events. Another big story this week is what's going on in Japan. So in Japan, we had elections over the weekend, elections to the upper house. Some of the seats to the upper house, it's not general elections to the lower house. Nevertheless, the LDP party, led by Prime Minister Shinzo Abe, gained more seats. This could mean constitutional change, which is maybe problematic politically with Japan's neighbors. It doesn't move markets that much. It is in the headlines, but doesn't move markets. What is in the headlines is more stimulus in Japan. Okay, more fiscal stimulus worth 10 trillion yen. Okay, that's what's on the cards now, and perhaps more monetary stimulus. Now, the big stock in the market has been more what's called helicopter money, basically monetizing the debt or handing cash directly to consumers. Anyway, we had this negative mood, went all the way down to 100 once again. We didn't reach the post-Brexit lows of 99 that we've seen in the morning after Brexit. Remember, the yen is a safe haven currency. Good morning, Luca. We did have when the mood deteriorated, a fall to 100, but just after the elections, things improved. Well, first of all, we had more clarity in the UK, so it means less safe haven demand, but perhaps more importantly, promises of stimulus have also pushed dollar-yen higher. That means if the Bank of Japan prints even more money and the government spends it all out, they could really weaken the yen, cause inflation. Another reason to think about that is that, first of all, they denied helicopter money, and you know that there must be some truth in the news if it's being denied. Secondly, Ben Bernanke, former chair of the Federal Reserve and the one that coined the term helicopter money, he visited Tokyo and met with the high-ranking officials, with Prime Minister Abe and with Governor Kuroda. Anyway, currently, again, the government denied this, but the yen is weakening on both these factors. So currently 104.35, reached a high of 105, very round number. Well, just under 105. 106.10, I would say, well, maybe not that. It's a bit of an old line at the moment. But yeah, I would say 106.40 and 107.65 are lines to the top side. On the downside, we can add this line right here, sort of a separator here at 103.40, and further support 101.50, and of course the round number of 100. Okay, if we fall under 100, once again, the pair actually loses a digit. Anyway, currently we're still on high ground, waiting for more news from Japan and other stuff. So if I talked about the biggest movers and shakers are the pound and the yen, let's jump directly to pound yen. Amazing moves once again right here. So we fell all the way below 130. Okay, let's look at the actual low. Pound yen is a relatively popular currency pair. Anyway, we had a rise of around 1,000 pips from the lows of 128.47. Okay, it got close to 140. Quite a huge move there. Remember that the night of the referendum, when we thought it would be remain at the very beginning, pound yen was at 160, so 160 to 128, 3,200 pips, but now we're already 1,000 pips higher. Okay, so quite an interesting move over there. I jumped directly to this cross because, well, it's I find it more interesting at the moment than the regular pairs, such as euro dollar. We'll talk about that as well. Of course, 133 is some kind of support as well. And 139.65 has been the top. I would say that 140 would be an interesting line to watch. And if we continue this rally, maybe this would be the next line, about around 144. Okay, anyway, wild moves on pound yen. Okay. What else is going on? Well, again, can this last? Regarding the yen, I would say helicopter money is certainly on the cards, but it's very charged politically. Okay, first of all, it will be a next bold step, basically saying Japan, that has 230% debt to GDP ratio, basically saying we'll print money to pay the debt, we'll put money in hands of consumers. That's a huge move in a Western country, in a modern economy. Okay, and it also means weakening the yen. That means more competition with China and the United States, with the world's number 2 and number 1 economies. The United States criticized Japan a lot for its monetary policy that weakens the yen. And if they take this bold step, of course, they'll come under pressure. I still believe it'll come, just not now. In 4 months, we have the elections in the United States. Any move by Japan, especially with Donald Trump and other Republicans as well, criticizing Japan and China and about their monetary policy, about the exchange rate, I don't see it coming before the elections. I see just more baby steps from the government and from the central bank, but after the elections, that will be a good chance for them to go all in. And of course, speculation already moves markets, so that's why we're seeing these kind of moves against the Japanese yen. Okay, let's talk about a few recent events. Yeah, non-farm payrolls. We had non-farm payrolls on Friday. And the bottom line, it wasn't such a big event, okay, if you look at the overall movements in markets. But I still would say it did shake the market quite a bit on Friday. And there's good reason why we had crazy markets. First of all, the headline was much better than expected, 287,000 jobs gained, okay. That's good news, of course. But it was a bounce back for only 11,000 in May after revisions, okay? So what do you make out of it? What I make out of it, if you look also at April, 144, that the average is around 145, 150,000 jobs gained in the last 3 months. That's lower than the averages we got used to, above 200,000. So it's not a disaster like we learned in May, but there is some kind of slowdown in job growth. Now the argument goes, is this slowdown in job growth because the economy is getting closer to full employment, or is it just slowing down? I would say more slowing down than anything else, but it's still growing, still no disaster. Wages also here a mixed bag, a month over month weaker than expected at 0.1%, year over year 2.6%, which is better than last month's 2.5%. Also, the unemployment rate figures are mixed, 4.9, which is a rise in the sort of headline employment figure. But the real unemployment figure that counts also discouraged people and involuntary part-time workers actually dropped to 9.6, and that's good news. All in all, was mixed. Market reaction was also quite mixed as the dollar strengthened at the beginning, then weakened quite a bit, then basically stabilized and ended the day a bit higher, but nothing really to write home about. Other important developments, we won't cover all the indicators, of course, but ISM non-manufacturing PMI looks strong with 56.5. That's encouraging. That means that the services sector in the United States is still growing at a nice pace. US jobs that we had yesterday were also okay. They were for the month of May, and they didn't show a disaster. They did show only a small slowdown. And Canadian jobs, they disappointed, they fell. That's relevant also for today's Bank of Canada's decision. And another thing that's going on in the background before we reach euro-dollar is the Italian banking crisis. So far, it hasn't moved the euro too much, but it has a great potential of destabilization. So Italian banks suffer very high non-performing loans. It means they lent money and this money will never come back. It's around 360 billion euros, according to some estimations. Specifically, Italy's oldest bank and the third largest, Monte dei Paschi, I don't know if I'm saying it correctly, is under serious trouble. According to EU rules, it should, first of all, raise capital, limit its debt via taking money from junior bondholders, but these junior bondholders are basically Italian citizens. The government doesn't want this kind of trouble because, well, Prime Minister Matteo Renzi is facing a referendum in October. Doesn't want this kind of political trouble. The EU tells him, no, you try to rebel against our austerity. We have to play only by the rules. That means you cannot use state money or European money, and there's a clash between the EU that wants, Italian citizens to suffer via their bonds, and the government which wants to use government money or EU money to resolve the situation. It's still in the background. It doesn't move the euro. But if there are worries about banks in Italy, these could spread out not only to they could be limited not only to Monte dei Paschi, but to other Italian banks and to other banks, for example, here in Spain. You never know when it's going to end. So it's important to keep an eye open. Same with the Greek crisis. It's never over, never resolved, okay? Okay, let's move back to currencies and talk about other pairs. Euro-dollar had its action around the euro referendum, of course. Boom, this is the fall, the Brexit fall. Since then, back to range, okay? We're in a lower range than we used to be. But movements are really, really limited. It's so frustrating. Look at today's move, 25 pips. Some resistance 111.30, high resistance 111.90. Support, I would say 109.60 and 109.05, the post-Brexit low. But moves, as I said, are very limited. Maybe we need a bank run to move the euro. Well, hopefully we're not there. But anyway, the euro is very, very stable. At least Draghi can be satisfied that it's it's lower than it used to be. Well, 200 pips lower against the US dollar. Okay, we talked about the pound, we talked about the yen. Let's jump to dollar CAD, 130.70. It moved a bit higher. Oil prices did fall. Disappointing jobs report in Canada. It became much more choppy. Support 128.30 and further support 129.10. 130, it's a round number, but not as strong as it used to be. 130.80 is weak resistance. I would say high resistance, it used to be here. I would say it's here, but the pair has become choppy. Okay, 131.40 maybe. Okay, that's dollar CAD. Let's jump to oil. Oil prices did fall eventually. We reached a new low of 44.50. Currently at 46.10. It isn't going anywhere fast, but it's certainly off the low. Sort of does a U shape here, sliding to the downside. Gone are the days of above the $51 a barrel. We're back to 46. It's over 10% off the highs at the moment. Not going anywhere fast. This is a season where oil is used in a higher quantity. On the other hand, supply is also abundant. And so we're at lower levels, still lower levels than this time last year. Okay, not so good for the Canadian dollar, but there are also other factors moving the loonie. Aussie dollar enjoys quite a big ride. We had elections in Australia. It took them a long time to count the votes, but eventually the current government continues, perhaps with a smaller majority or hardly a majority, but anyway, no change. That's what markets wanted. The Liberal government led by Malcolm Turnbull, and continues. Turnbull, I'm saying his name correctly. Anyway, so that's more stability there. Currently 75.89 Aussie dollar, just under 76. Let's update this line here. So 76.60 I would say is resistance. Quite a nice recovery for the Australian dollar. The RBA is in no rush to cut interest rates, not so soon at least. Further resistance 77.40, support 75.30. Okay, so that's where we are in the Australian dollar, grinding its way to the upside. Kiwi dollar here, here we had stability in milk prices, and also here the RBNZ is not in any rush to cut interest rates. We had a nice move up here. Kiwi dollar, Australian dollar, I'll go back to that, did survive the Brexit quite well. The New Zealand dollar was in some state of a shock, but since then it did recover. And with the lack of enthusiasm for cutting rates in New Zealand, we have this rise 72.48 at the moment, 73. Let's put another line of resistance right here. So 73.27 is high resistance, the high for this cycle. Support, well, around 72, 71.40. Also here it became a bit more choppy, but at least we have a nice trend to the upside on Kiwi dollar. Okay, dollar Swiss, haven't looked at that pair for a while. 98.90 is the current level. Of course, the rise of the US dollar following Brexit helped also this pair advance. 99 is some kind of resistance, followed, and of course parity is high resistance. 98.50 and 98 are levels of support. Euro Swiss, back to the old ranges. We had this Brexit shock. The S&P admitted that it intervened. We fell all the way to 106.20. This didn't last because of the intervention. I would say 110 is some kind of resistance, and 108, 107.60 is some kind of support. Euro pound, of course, big drama here. The pound weakened a lot more than the euro following the referendum, the Brexit. So it went all the way, well, above 86. No, sorry. Went too much. Yeah, above 86. To much higher ground. Since then, of course, the pound has recovered quite nicely this week, and the euro was not going anywhere fast. So back to 83.27 at the moment, still much higher than the pre-Brexit levels, and basically the highest level since 2013. High resistance at 85, a very round number. 84.50. I would say support at 83. Yeah, and 80-20. These are levels to watch on euro pound. Quite an interesting cross, basically because of the big movements in the pound. Euro yen, of course, the yen strengthened a lot on Brexit. The euro weakened, but since then we had a recovery. Currently 115.40. Very different levels to those we've seen before the referendum. Support at 111, very strong support over there. Okay, further support at 109. Resistance, well, I would say just the line that we've seen recently right here at 116.25, and support at 115. Relatively choppy pair as well. I mean, big movements, but not going anywhere fast. I mean, big movements, but not so orderly. Okay, and we talked about pound yen, very exciting cross. Okay, so we covered all the currency pairs we usually cover. We talked about the events we had recently. Of course, the non-farm payrolls was the big event, and of course the political events in the UK. Let's talk about today's events. We have a rate decision in Canada at 2 GMT. Okay, Canada, as I said, oil prices are not so good. They stopped their rise, higher production. Not really good for Canada. Also, jobs in Canada, they dropped by 700 people. They were expected to rise. And the unemployment rate did fall to 6.8%, but that was on top of a drop in the participation rate. Exactly the same things that we see in the United States. However, the Bank of Canada is not expected to cut interest rates. First of all, central banks don't like to move that much. Secondly, the interest rate is low enough at 0.5%, even though they said that the lower bound is minus 0.5%. And perhaps another reason is that the government, relatively new government led by Justin Trudeau, is working. It's already implementing a fiscal stimulus package, and that is supposed to do the work to revive the economy instead of the Bank of Canada. Also, there are potential housing bubbles in Vancouver and Toronto, and lowering the rates would just fuel these potential bubbles. Okay, so the preference of Stephen Polo's, the Bank of Canada, is not to move too much. The focus will be on the statement, if they intend to do anything or no. I believe it'll be relatively good for the Canadian dollar, the statement that we'll hear today, but we'll have to wait and see. Also related to Canada, today at 2:30 GMT, we have crude oil inventories, the weekly release. Last time we had a draw of about 2 million barrels. Let's see what happens this time. And at 1:30 GMT, we have the Australian jobs report. Okay. So that's, of course, a big event for the Aussie dollar. Clearly, jobs report there. So we're expecting, this is, of course, the FX Read calendar on Forex Crunch, a rise of 10,000 jobs following nearly 18,000 last time. This is a report for June. Unemployment rate is expected to rise just a bit from 5.7 to 5.8. Remember, changes in the unemployment rate are related to, of course, the participation rate as well. And in Australia and also in Canada, it's important to note not only the actual change in jobs, but what's the underlying move, if it's more full-time or part-time jobs. That's, of course, the key event for the Australian dollar. Okay, any questions? Okay, what do we have today on the agenda in terms of our special reports? We'll do these special reports, and they will be available as separate video clips. Oh, I see a question here. RBNZ statements overnight about low inflation preparing for an August cut. In theory, they don't like inflation. We'll also do a preview for next week. We have fresh inflation figures on Sunday. Well, it'll be Monday morning in New Zealand, and that could give them that could be critical for the decision. Sorry. So if it's very low inflation, they could cut, and if it's not, they will not cut. But there are reasons not to cut interest rates, like in Canada. Housing in the biggest city, Auckland, prices are elevated. Cutting interest rates will fuel fuel this kind of bubble. They don't want to do that. They have other tools. They have various tools keeping the interest rate high, and also doing some macroprudential moves, limiting the rates. Raising the minimum down payment, for example. I'm not sure. I mean, they don't want. They would prefer a weaker currency, that's for sure. But the economy is not doing that badly. Milk prices are relatively stable. Unemployment is low, so I'm not sure they'll cut in August. I think they also want to see the impact of Brexit on New Zealand. So also there we could have a wait and see mode. Okay, hope that answers the question currently. I would say if you're into shorting the Kiwi, wait for the inflation figures early next week. Okay. So today's special events, apart from the wrap-up that we'll do at the end. Another question here from Fabian. What is your outlook for the GBP for today and the rest of the week? Well, for today, I think it's maybe you could see there's sort of wait and see to hear from Theresa May, which will enter Downing Street. She'll probably make a statement. I'm not sure it'll be very long, but basically wait and see to hear what the government intends to do about Brexit, and wait and see for the Bank of England tomorrow. We'll soon begin the preview for that. For the rest of the week, I believe Mark Carney, the governor of the Bank of England, will sort of provide some bearish sentiment, and this will allow the pound to slide. I'll talk about this more in detail very shortly. And a follow-up question from Joe: do you think that the pound will fall tomorrow with the rate decision? Yeah. Okay. Let's jump into that. So this is the preview for the Bank of England's decision on July 14th, the first decision post-Brexit. So it happens at 11 GMT, 1 p.m. Here in the Old Continent, 12 in the UK. This time it's different. Why? Because the Bank of England hasn't changed interest rates since 2009, when it lowered the interest rate to 0.5% and never changed it ever since. Mark Carney is in his office, okay? Governor Carney, the Canadian leading the Bank of England, since 2013, he never changed policy. QE, currently the program stands at £375 billion. The last time it was changed was back in 2012. Again, Carney didn't change that either. This time is different. One big reason, Brexit. Lots of uncertainty. Already had an impact on financial markets, especially the pound. Weaker, lower bond yields. Stock exchanges have recovered, but there are signs that it's already hurting the UK economy. For example, these property funds I mentioned, I mean, if you invested in a property fund and want your money back, even with the loss, you can't get it. The money is frozen. Okay. Also, we heard anecdotal evidence of some orders being cancelled or not renewed, deals falling apart in the UK, or either between companies in the UK and in Europe or other places because of growing uncertainty. We have very few numbers. The only number that we've seen so far is the construction PMI, which crashed to the lowest level in 2009. Of course, the construction sector, the housing sector, helped the economy recover in the past few years, and now it could drag it back down. That's the main focus, property funds, as I mentioned. Okay, but we don't have enough figures of retail sales, for example. We don't have other updated PMIs, post-Brexit PMIs. The data was collected before Brexit. Okay, what the Bank of England does have is its regional offices across the country, and it has some anecdotal evidence. Bank of England, Mark Carney said that they will do some action in July and more in August. Why more in August? Because in August they have their quarterly inflation report, which is not only about inflation, it's about the economy in general. So they want to do some easing now and further stimulus when they'll have more data in August, their own quarterly inflation report, as well as other figures, okay? So what are we expecting from tomorrow, for tomorrow? Markets are expecting a cut of the interest rate for the first time since 2009 to 0.25%, okay? But it's certainly not a done deal, not fully priced in. We didn't get a specific hint about that. There's also a chance that they will not cut interest rates, okay? Leave it unchanged and wait for that until August, okay? That's one option. Another option is that they'll slash it to zero, matching the Eurozone interest rate and sort of showing us that the situation is really bad. That could really hurt the pound, okay? So the first move, I would say the initial move tomorrow will depend on the interest rate. Sort of markets are around a cut of 25 basis points, but we could have no change or interest rates slashed to the round zero number, okay? That'll be the first thing. The second thing they could do, I don't think both of them would happen, but at least one of them is adding more QE. Also, this has limitations because what will they do with QE? It's printing money to buy bonds. Bond yields, treasury bonds, government bonds in the UK already fell to lower ground, okay? So the yields. So how low can it really go? How much can this impact markets? But it's still something that would be appreciated. Of course, if they both cut rates and add QE, it'll be very negative for the pound. And of course, more importantly, they released their meeting minutes alongside the state decision itself. And there they could hint about more action for August, okay? I believe that the decisions taken tomorrow will be unanimous. We'll also have the voting pattern, but you never know. I guess if they go to one extreme, either doing very little or too much, we'll have dissenters, hawkish or dovish. But assuming it'll be somewhere in the middle, we will have a unanimous decision. But the meeting minutes are therefore more important for what they intend to do in August. Okay, so it's interest rates, QE, and hints of what they'll do in August. And basically the tone, how bad is the situation? If it's terrible, and they're doing much now and more in August, the pound will fall. despite the political certainty that we have now, relative political certainty. If they're in a more of a wait-and-see mode, okay, we have a new government, we're waiting. We'll probably do something in August, but nothing now, or a bit now, but probably not sure about August, depending on the figures. Then we could see the pound rise. So anyway, I'm trying to tell you, this is one of the more complicated rate decisions. Anything can happen. Nothing is fully priced in. Currently, as I see it, my expectation is that because we had this quite a big rally in the pound, let's take another look at it now, following the political certainty. Okay, we're already off the highs, but I believe we'll have a swing of the pendulum to the other side. So first and foremost, the interest rate. Second in rank is the QE program, if it's enlarged from 375 billion pounds. And the longer term impact will come from hints about what they intend to do in August, and of course, how they see the UK economy. Again, my expectation is for Carney to drag it down because we went too far to the upside in recent days. Okay, so that's the preview in this context. Question from Luca. Do you have a view on stock breakout, QE, overdose climax? Not everyone is talking about a new secular bull market. Seems like a big second to me. Good morning, Ed. Okay, so that's a different topic. Anyway, yeah, QE has limitations, diminishing returns, as some say. Okay. We know that the Fed said that, the Bank of Japan knows its limitations about that. The ECB could be running out of bonds to buy. That's next week's decision, because with all these safe haven flows, German bonds, but also of other countries, have been in high demand. That means yields fell. The ECB has a limit of buying bonds up to minus 0.4, okay, because of its deposit rate. That's the rules it established. So it's running out of things to buy. They already are buying corporate bonds. We might see that also in the UK. Okay, the Bank of England could buy corporate bonds. Again, the impact is limited. I mean, look at the level of low level of yields, also of government bonds and of corporate bonds in Europe. This, in theory, according to Economics 101, should mean that when borrowing costs are low, companies and governments should spend, but that's not happening. Not private sector investment and not public sector. So, yeah, and we need, I think fiscal stimulus is what's needed. Japan could pioneer that as well. And let's see if that happens. And if that happens, I think we could have a bullish stock market. Yeah, but if we see inaction or just more QE, yeah, I think I agree. We could have an overdose and diminishing returns, and it's all into stocks. I mean, I don't see stocks moving higher. Question from Ed. Follow-up Dow and S&P at all-time highs, and brokers starting to gate fund exits this year is interesting. They don't teach negative bond deals to these new grads that are in the market and they don't have a clue what to do. Yeah, the correlation, by the way, between bonds and stocks, and my associate Leroy Korn studied this. Well, currently it's an inverse relation, okay? So you're either going defensive, buying bonds, safe haven flows, or you feel risk on and you buy stocks. It doesn't have to be this way all the time. The relation can be straightforward, where either you buy everything or sell everything. So watch out for changes in correlations. Okay. Yeah. All right. So after we had with BOE preview, and that's this week, let's talk about other events this week and then do a preview for next week. So tomorrow we also have a producer price index in the US and jobless claims as usual. This is a warm-up for Friday's big events. Well, we have Chinese GDP on Friday. This could impact the Australian dollar. Another slide in growth is expected to 6.6. still within the government's targets. Okay, so that's could cause some worries around the world if it falls below 6.6, but nobody's going to believe these figures anyway, because Chinese government prints the figures that it projects early in the year. But many are going to doubt it. Anyway, it still moves markets, even though many people don't believe it. At 9 GMT, we have the final Eurozone CPI. Could feed into the ECB's decision next week, but because it's the final number, it shouldn't have that much of an impact. And the big events come tomorrow from the United States: retail sales at 12:30 GMT and consumer confidence at 2 GMT. Retail sales refer to June, and consumer confidence to July. Okay, so that's sort of a big focus on the US consumer on Friday. All right. So once again, we have a pause from Brexit and UK politics on Friday to focus on other events. Well, eventually UK politics will fade out, but not so fast this week, because we have a new Prime Minister and the Bank of England's decision. Okay, so that's the next event for this week. Before we reach the preview for next week, let's see if we have questions. You don't do the show every day? No, the show is once a week, every Wednesday morning, at the moment, at least. Okay. So this is a preview for the week beginning on Monday, July 18th, ending on July 22nd, midsummer here in the Northern Hemisphere. So as I mentioned earlier in the show, we have the market just at the market open on Sunday at 10:45 p.m. GMT. We have New Zealand CPI. Is a big event because New Zealand publishes CPI only once per quarter. That's why I'm mentioning it on the weekly preview. And the QE is at high levels, so this could be a make or break moment if the QE goes to even higher ground or bounces from these high levels. Okay. Monday, nothing really special. Of course, reactions to Friday's figures, more political developments, but nothing in terms of indicators. We have CPI in the UK for June. This could give us some indication about how prices moved reacting to Brexit, although most of the month was pre-Brexit. Remember, the EU referendum was held on June 23rd. More importantly, we have the German zoo sentiment. That's not from the UK, but from Germany. And it's not Germany's number one think tank. The number one think tank is IFO. Nevertheless, this could give us an early indication about investor confidence, business confidence in Europe following Brexit, because this is a figure for July. Okay, so last time the indicator bounced back up, things were more optimistic. Was it positive ground? Let's see if we fall to negative ground, or if German investors are still confident about the future of the economy. Okay, housing figures also in the United States on Tuesday. They tend to offset each other, but if they both go in the same direction, it could be interesting. On Wednesday, we have the UK jobs report. Jobless claims for June. Once again, mostly pre-Brexit, but we could still have some indication about how, if this had any kind of impact on jobs. I guess the next report for July will be more interesting. Remember that the unemployment rate and average hourly earnings refer to the month of May, so a bit outdated at the moment. Okay. On Thursday, we have UK retail sales. This could be a bit more relevant. We have, of course, all of them are top-tier figures: inflation, jobs, and retail sales. But retail sales can show how people actually reacted after the Brexit, and also before, if they held back some expenses. That will be interesting to watch. But the big event on Thursday is the ECB's rate decision. We'll talk about that more. I'm going to do a special preview next week. But basically, what's on the agenda for Draghi? No changes expected. No new forecasts are expected this time. In June, they began implementing corporate bond buys and TLTRO. Two topics are the impact of Brexit, if the ECB intends to act. What's the situation in Italian banks? Remember, Draghi is Italian. He'll be asked about that as well. And the inflation situation, which has improved just a bit, but remains far, far off the ECB's target. I believe that Draghi will want to negatively impact the euro, but without doing anything, I don't think he'll really be able to do that. Anyway, we'll talk about that more next week. Of course, that's a big event. The ECB meets only once every 6 weeks. On Thursday, we also have US jobless claims as always, and existing home sales. Get some indication about the housing sector. And on Friday, no US figures of high importance, at least. Focus on Canada with inflation and retail sales. That'll sort of end the week. The big event, of course, is the ECB. And the other big events are the indicators regarding Brexit, especially, I would say, UK retail sales, and then also the ZEW business confidence coming from Germany. Okay, so that's a preview for the week of July 18th to July 22nd. Okay, so it's time for the wrap-up for today. Let's cover quickly what we did in the program so far. The mood in general remains positive. Political certainty in the UK. Today, Theresa May, Britain's second female prime minister, enters 10 Downing Street with no prolongation of the competition up to September. We have much more certainty. Let's help the pound shoot 500 pips off the lows. But we still don't know how Brexit is going to look like. Theresa May so far said Brexit means Brexit, respecting the will of the British people. Okay? More optimism comes from Japan. Upbeat markets on planned stimulus from Japan. They denied helicopter money. I think it'll come only after the US elections, but they want more stimulus in general. That pushes the yen lower. I suspect that this can last for a long time. Still lots of problems in the global economy, still uncertainty about Brexit, but this is the mood at the moment. Today we have Canadian rate decision later on today at 2 GMT. Oil inventories could also move prices, also especially the Canadian dollar. No changes expected from the Bank of Canada. I believe they'll be relatively optimistic. At least wait for the government stimulus to have its impact. And at night we have the Australian jobs report, which is of course a huge event for the Aussie. And we're expecting a gain in jobs over there. Could also push the Aussie a bit higher if these expectations become reality. Okay, tomorrow's big event, which is already moving markets, is the rate decision in the bank coming from the Bank of England. Markets expect a rate cut of 25 basis points, but they could opt for adding 50 billion of QE. Probably not both. If they do one step, it's more or less priced in, but don't count on no reaction. I'm sure we'll have a reaction. And if both come in, or we have a big rate cut, of course, it's negative for the pound. If they don't do anything, it's positive. But of course, we will also look for hints for next month's event when they have the quarterly inflation report. Quite a big event. I want to invite you all to join the live coverage with Valeria Bidnarik, Mauricio Carrillo, and myself tomorrow. For a change, the Bank of England's decision is huge. Okay, so that's certainly the big event of the week. And let's look at charts in this wrap up. So pound dollar is off the highs at the moment. During the show, it's sliding quite a bit, 132.44, off the highs of about 100 pips higher. Maybe markets are already taking profit or waiting for the Bank of England. Okay, I didn't see any political developments this morning. We had quite a storm of political developments this week in the UK. So that's, of course, I follow this currency now more than anything else. Resistance 133.50, support 133.40, basically current levels, and 131.20 is further support. Dollar yen, also big mover, 104.27 at the moment. Bond stuff 105. Also here we might say profit taking or a bit of a worse atmosphere at the moment. 103.40 is support, followed by 101.50, high resistance above 106. Dollar CAD a bit higher ahead of the rate decision, 130.80 resistance, followed by 131.40 support, round number of 130, 129.10, and 128.30. Aussie dollar just hugging the 76 level, already reached high resistance at 76.60. Support is at 75.30 and 75. Okay, and the Kiwi dollar also a bit off the highs, but still looking good, 72.55. Trend remains to the upside, support at 71.50, resistance 73.25. Okay, so that's the wrap up for today. I'll just mention one more thing. On Friday we have this Friday quite a busy day. So tomorrow we have the big UK rate decision, Bank of England's rate decision. On Friday, Chinese GDP and these two important figures from the United States could change attention, could switch the attention to the world's number one, number two economies instead of the UK and Brexit all over again, all the time. Okay. So that's it for today. Thank you very much, everybody, for coming. Thank you for the great questions. You're welcome to follow me on Forex Crunch on Twitter. Join our live coverage tomorrow. Wish everybody a safe and successful day. See you tomorrow in the coverage, and if not, next week. So that's it. Thank you very much, and see you. Bye-bye.